Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on January the 7th for a Forex market breakdown for you. And before we get into what's going on with the markets, we just want to pull up our disclaimer page real quick just to remind you that this webinar is for illustrative purposes only. Alright, with that we're going to go to our live screen, and we have the Forex-Trading-Unlocked.com website pulled up, and we already have the workstation page, which you can get access to from our menu bar at the top of every page. And here we have some numbers that came out. We had the ISM numbers and durable good numbers that came out earlier for the US dollar. We've had some nice little, actually, bit of movement for a Tuesday morning so far. Tomorrow we have manufacturing that'll affect the euro. We have, let's see, we do have labor productivity in the UK. That definitely will be something to look at for the pound. And then we do have some consumer confidence and some other numbers coming out for the EU. So the euro may be in a little bit of a play tomorrow after those numbers come out. And then we have also a Canadian number, overall comprehensive risk. That's something that could give the Canadian dollar a little bit of a jarring. And let's see, then we have for the 9th, a lot of German numbers that are coming out, industrial production being one of the biggest ones. And then we have the unemployment rate for the EU. That will be a big watch number for over there, considering they've had so many good numbers to surprise lately. And then we have in the U.S., well, there's a commodity report. The U.S. pork report actually will be big because of the deal with China going on. And let's see, we'll just leave it with that right there for the numbers coming up over the next couple days. Excuse me. All right, so we have the euro US dollar that's up here. We're going to cancel out the news real quick and the volume. All right, so what do we have going on here? Well, the first thing we have going on here is a sell signal that was triggered a few sessions back. This is a bearish engulfing line right now that we have signaling a lower trend for the short term and a potential corrective move, which it seems is underway. Now we do have, now remember, we had set this higher move low, and then we set this recent higher move high. And even though we are retracing right now, we have not made lower move lows. So that means that right now you need to view this as more of a corrective phase than as of a bearish turn in direction. And this is just a counter trend signal that we have. Normally you want to trade with the trend, but this is the signal here, this bearish engulfing line, this big red line, that's a very bearish sell signal. It's also very useful because it works a lot of times. And the one thing about it that you really need to know that really helps you out is that if you take the signal and you're bearish, whether you get short the outright forex derivatives or the currency futures, or if you put on, say, let's say an option spread, like right now, especially where the market was at earlier today, would have been great to sell credit spreads above any strike above where this last higher move high, because this is your risk. So if you're short the forex markets right now, or the euro US dollar forex cash, this would be your risk level, which is not too bad. Reward would have you actually pressuring this lower move low, or this last higher move low right here. So we'll see how this market we had a nice little rebound yesterday to start the week off, but right off the bat, boom, we've been trading lower since the close of yesterday's session. This is due to a lot of things that are going on, especially with the strength in the dollar because of Iran. Now, whether or not that's really going to become a factor will be something that remains to be seen. Right now we know the tensions seem to be escalating, but right now it seems like it's also more of a barking match that's going on. So hopefully things do subside. So where does this have us going for a target for all of you bears here, if you want to know what Teddy's talking about? So we're going to take this last low here and see how this lines up with our pivot here. Okay, so we have our 50% mark. These are just general targets. If you want to learn how to trade this signal, there's a book called High Probable Japanese Candlestick Patterns available on Amazon that teaches you on how to execute these, especially in multiple markets, whether it's the Forex cash, the futures, or the binary options or futures options. So we're going to change the color of this one so this sticks out a little bit more for you. All right, so this is our last higher move low, our big one that's for the trend. So we set this last higher move high, we have our sell signal, and now the market is taking a little bit of a hit again today. Where our target zone is these two yellow lines here, down to 111.09 down to 110.77. So right into this little band right here. This is where we're looking for support. Now, if you look at this target zone, it's actually very solid. Excuse me. You have this upward sloping line right here, which is holding the trend up. It's actually a very mild slope. It's a very manageable trending slope. Usually, when markets trend like this, it's just grinding higher, but you know, it works and works and works. It just takes a long time. And also the euro-US dollar has been in a very tight range for actually for over a year now. So we have a little bit to go here. Right now the market's at 111.47, so we're looking at about 37 pips left in this move. So it's kind of a little bit of a tough one. If you're not already short from when the signal went in, especially if you didn't take advantage of the opportunity yesterday or earlier this morning, then I would say the only way to play this would be with the binary options on the strikes. Anything above like 112 even, whatever, selling those, because you would use, this is your major risk right up here, but since we now have made this higher move high, higher move low, if yesterday was a lower move high and we take out this low from 2 sessions ago, then we have a really good chance of, obviously, since there's not very much left to go there, of hitting our target range. And then the question is, how deep does it go? If this is a beginning of a true dollar rally because of what's going fundamentally in the market, and this is where you have to think about what's going to happen going on with these markets right now. You can't just look at the technicals right now. You definitely have to take into account the fundamentals. So where does that leave us? So right now, I think you're going to have a good chance at coming right down into this area right here. And then this is like X marks the spot. What's going to happen here? The question with that one is do we still have a big rising conflict with Iran? Should we have a conflict with Iran that escalates, then you most likely are going to have this euro-US dollar taking out this upward sloping support line. Why? Does it mean that the market's overall bearish for the euro? No, not at all. It just means that typically in conflicts such as what is going on right now, the US dollar becomes a flight to quality currency. One way of checking that would be to use the Swiss as an indicator to see whether or not the dollar index and the dollar are really being bought, or is it the Swiss that's being bought? In this case right now, especially with the EU's stance and Europe's stance and a lot of the world's stance on this whole Iranian thing about trying to step back, and they're probably doing that for a multitude of reasons, that would probably lay credence to keep pushing this dollar index move. Since we talked about the Swiss, and we're trying to get a gauge on where the euro is going, let's take a look at it real quick. So right now we're bearish the euro, and we're looking for a test of our target range. But here we go with the US dollar Swiss. Okay, so this is in the opposite mode. This is heading higher. Now the US dollar has been getting hit really, really hard against the Swiss currency. And that was going on for, let's see, the end of November all the way into the end of December, ending on New Year's Eve. Now then we had this nice little pattern here that's starting to base here. So this is a question of, is the dollar truly getting strong? Originally, it was set up for a retracement move, a corrective move against the trend. But because of this Iranian conflict, that goes in with the retracement move, but also may change the trend. So we never want to pick a top or a bottom, but right now it's looking very likely that the US dollar Swiss has started to, well, it's definitely starting to base. So the question is it going to bottom? That remains to be seen, but right now we definitely know that we've had, here's a lower move low, lower move high. We made a lower move low on New Year's, and then 2 sessions back we made a lower move high. Now the question is, it was yesterday's slide and today's turnaround, is this the next base? So for your aggressive bulls, I would say that the lows from yesterday and today are the key support levels to watch out for, and for sure the low from the end of the year here. So basically 96.48 up to 96.75. This is a heavy support band. I don't think you're going to get below 96.75 right now, especially with the dollar in play. So this means we have flight to quality in the dollar, and we're selling the Swiss. So this is what does that mean? It means the world's view right now is more secure with dollars than with the Swiss currency. And that's pretty odd considering how strong the European currencies have been for, obviously, especially the Swiss, for some time. All right, so now let's look at what's going on at the British pound US dollar. So we know the dollar is right now getting a little weaker against some of your major currency crosses, especially we have the euro and the Swiss. Now look at this with the pound, folks. This is a different story. Now here's where this gets really complicated with the European trade, and we're going to be bouncing between these currencies here because of what's going on. Here is the Brexit line. On the 31st of January, the UK will finally be separating from the EU. The trade deal will not be done until, well, it'll be mandated to be done by December of 2020, but we all know that the odds of that happening, considering how long Brexit has taken, is probably pretty slim. So right now, it's going to be very tough, I think, to see the pound really start to sketch a move out just because we're heading into this little area here. So I believe what you're going to see is that until this date here, when we have the Brexit finally occur, is that we're probably going to see a little bit of a range trade here just in this time frame right here. So where does that leave us for parameters? Well, this last higher move low is a very big support base, and then we have your last higher move high. I would say that these are your breakout levels. Anything inside of this is going to be a range trader's delight and a swing trader's nightmare, just because of the fact that you can see how the market's staying neutral to positive, and now it's starting to wedge. The British pound is typically one of the more stronger currencies, especially when it comes to having their ATR, average true range, where there's always a lot of potential in the pound when it moves. And even when it's sideways, it gives range traders a lot of opportunity. It's a tough currency to get a beat on. When it trends, it really, really helps you catch some really, really nice moves. But when it's in your face, anyone who's traded the pound knows that it hurts very quickly. So where are we going with this? Sideways. Just be very cautious with this and expect this wedging. I would be careful about trading the swing pivots now. You see that we've made a higher move high, higher move low. Now we've made a lower move high, but then we've also made a higher move low. So that's really putting us into this just sideways direction going until here. And then this will be the spot where we can most likely start to see either go this way or we go this way and make a challenge of these pivots here. So January 31st is a big deadline. I think also because of the Iranian conflict, that also gives support to the dollar. So if we're going to do anything with this market, it's likely that there's going to be a test of support before resistance, just because of the dollar index strength that could be occurring. So we're going to look at the Dixie real quick before we jump back to the euro US dollar and then make it around to the Asian markets. So we've got a little bit of a beat of what's going on. So yesterday there was a sell-off in the dollar index, but that looks more like it was just a profit-taking move. This looks like it was bottoming, or not bottoming, but hammering new lows, but now it looks like it's basing. It looks kind of like what chart? The US dollar Swiss that we just looked at. And when you start to see something like that, when the correlation between the US dollar Swiss and the Dixie, or dollar index rather, is tight in correlation, that's when you start to have to recognize that that's where the direction is. In other words, they're in tandem. When they're in tandem, that is a very good help and aid for looking at the other currencies. So if we have the US dollar index looking like it's basing, that's going to put the major currency crosses under pressure. So that helps to lay credence with this euro US dollar falling down into our target range. And then the real question is it going to be a breakout correction for the dollar index because of this fundamental conflict that will start to drive the technicals? We're going to have to see that over the next few days. But let's put this also into context. Remember, we had that Brexit date for the British pound. Well, it also affects the euro US dollar. So once we come down into this target range, we may start to see a sideways trade hold up. So this pivot may hold up. I wouldn't be the most aggressive bear, because think about this. The euro US dollar has been they've been trying to bash this currency for over a year, and every time they do, no matter what, it seems to hold up. It just can't seem to really hold below $1.10 or $1.09 half. Right now we're trading up at 111.44, so yes, there's room to the downside, but this would be with severe factors that impact the euro and the EU zone to cause a move like that, at least historically. So unless the dollar gets a monstrous rally because of whatever's going on, and I can't see it getting a big rally, I think that in a situation like this, especially since it's all a barking war, you're going to just see upticks in the dollar, and then once things really start to subside, then you're going to see the sell-off. Because right now the dollar index was set up for an upside correction anyhow. This all coincides with now fundamental factors to help drive it, and then hopefully for the whole world and just in general that these things in the Middle East will start to settle back down to its normal, just whatever rumble it is. Okay, so we looked at the European markets. Now we're going to go jump across the pond the other direction and go to the Japanese yen. So we have the US dollar yen cross. This is a big deal right here. Okay, now the US dollar yen, no matter what the dollar index is doing, seems to be, holding very firm to higher. So it's gotten a little bit of a sell-off because, especially with the price of oil rallying again even higher and pressing this rally up to the upper $60 levels, that's not good for the Japanese or for the Japanese yen. So this U.S. dollar strength came in from obviously when it started out with Iran, but then look at what happened yesterday. It had this bottoming here. Now this here is a high probable Japanese candlestick pattern right here, and if you want to learn what it is, you can read a book called High Probable Japanese Candlestick Patterns, and you'll know that this is actually a very reliable one. And if this is going to be solid, and especially since we have this follow through today, if we get a positive close, it's very likely that the Japanese yen is going to start to return back to buffering these highs. At the very least, it's going to most likely get above this pivot area where the lower part of this range has been. So you can see that the market is just above this caramel line right around $1.8404. This is pretty much your directional line. This has been where the market has been supported no matter what happens to the dollar index or the other currencies. The US dollar yen has been pretty much going stronger for months on end now. So while other currencies were doing very well against the dollar had a nice correction back in November, and now it seems like it's trying to do it again, which should help the US dollar yen also continue to go higher. All right, so let's see where we got for some numbers here. What do we have here? Excuse me. Let's see, we have to grab the Fibonacci here, so we'll start out with our high up here. This is one of your simpler ways to find price targets. If you want to learn how to get the actual price targets for this trade, you got to read the book. Okay, and it's also available on Kindle. It's Kindle and paperback, available on Amazon.com. High probable Japanese candlestick patterns. Okay. All right, so we have this little zone right here. This is our target zone for this current rally. Right there. Okay, so this is about where you're going to see, I would believe, a retracement if this buy pattern is going to remain solid. Now, once it gets to here, I think you're going to start to see kind of a sideways trade like you've seen in these spots, like right here. And then also like right here. And I think you get the gist of it because we have this one following up right here. So let's put this like this. What does this look like? Okay, wow. So see how this one is? We'll change the color on this just to make it stick out a little bit more. Actually, that's probably not the good color to use. Let's use this. Okay, and we'll make it a little thicker. All right, so you can see how this consolidated here, consolidated here, consolidated here. Look at this. We're heading up towards, if we hit our target range, that puts us right into the spot to do a little consolidation here. And then the question is, do we go up or do we go down? all trading above this 108,404 area, I think will keep the market strong to higher, even if the dollar index starts to fall back again. But if the dollar index is in rally mode right now, because of the fundamentals, then there's a really good chance, and especially if oil stays high, that the US dollar yen is going to not just get this target range here, it's going to make a breakout for this upper target level right here at $1.973. And if we take this out, this is where you got to be careful. This is a grinding bull. This market doesn't seem to really want to jump through resistance when it pierces it. It just wants to keep butting up against it. So, and that's because it's been kind of counter trending with the US dollar at some points, but typically it's been running. This is the one market where the dollar has been strong. So when the dollar is being crushed by all your other currencies, for some reason the US dollar yen holds up and it goes the other direction. So there's remember, flight to quality going on in the dollar, and then we also have the Swiss that's falling apart a little bit against the dollar, and then there's the yen that, well, no matter what, it just seems that the dollar is very strong. And until we have that trade deal that's supposed to be signed in a week, I think that you're going to still see this pattern with the US dollar yen continue. All right, now here we have a nice sell signal that, boy, was this trade a good call last Friday. All right, so here we have another bearish engulfing line sell signal, and look at this follow through, folks. We already slammed through our target point. So now I have to say, when it comes to the Australian dollar, US dollar, if you're trying to buy this thing, I would not try and catch a falling knife. That's probably pretty foolish. Please use some very tight risk parameters if you're buying into this move. You are right by this last higher move low. I would say this is your first key pivot right here. So what happens in this spot right here will dictate where this market goes. The overall trend obviously has been a bull, but look at what happened today. Today we slammed through the support. Now, the one thing you got to also take into account is that current uptrend has been a very steep slope. So this is the slope here that's really maintaining the trend higher. So it's likely that we could take out this last higher move low, which would mean we'd have a higher move low, higher move high, then lower move low, putting us in the neutral to bearish posture, at least short term, because of especially an excessive break. But here's the thing is, folks, markets go out like they come in. This was a very steep slope. Now we're having a steep slide. Does that mean we're gonna start to pound big lows down here and take out this whole trend? Not necessarily. We still have this nice sloping support line here. So if we fall through our target here of this last higher move low, we could bounce off the upward sloping line right here. Then that would be a good place to return to our excuse me, our bullish trend. Now remember, the dollar is in play. So if the dollar is in play, oil is also really high, and there's turmoil in the Middle East that also disrupts part of Australia's supply chain, or could. That starts to weigh heavy on the Australians. So the poorest Australians are at the mercy of a trade deal between China and the United States, because most of what they support, most of their where they export to is China. And then we have now what's going on in the Middle East that has other fundamental factors messing with things. So this is interesting to see how this has fallen apart today. For those of us that took advantage of this trade last week, we're done. It's over. We already hit our target. So if you want to know how that, how we set that up, you have to look at our past videos from a couple days ago, and you'll know all about it. So that's where we're at with the Australian dollar, US dollar. Let's see how the New Zealand dollar, US dollar is shaping up today, because this one also had given us a nice little sell signal. But this one, like where the Australians are falling apart, this one isn't as steep of a slope. So I think that you have a very good chance with this one of actually being maintained for at least a little while yet. I mean, the overall slope for this trend is also not bad. It got a little steep over the last couple of sessions, but overall it's not too bad. And also, whereas the Australian dollar is hovering right above that last higher move low pivot, this one isn't. This one's got a little bit of a ways to go, and this one is a very big bull. So you did take out the short-term trend here. If we look at this today, so today is like the breaking point. We're hitting these little extreme support levels, but remember, we had a bearish engulfing line sell signal here, and we are almost at the target for this one. So we still have a little bit of a ways to go. You had this last higher move high. That's another short-term little support area. Probably why the market's having a little trouble hitting support now. It's probably holding up because of that. So if you look at this little spot here, I think that short term this is good support. Remember, the dollar is in play, and if the dollar continues to rally and be bought, you're most likely going to see this market still slide down a little bit lower. But I don't think that 65.5 is going to fall through here. But I would definitely use this as a key pivot. If you fail here, most likely you're going to have this market pressing this lower support line that's rising up here. So then that means there's a big free fall, especially if it happens over the next couple sessions. This is a big move, so you don't want to be buying into this one. If you're going to look to buy this market, I would say you look for an extreme signal in the USD as a turn in the dollar. Otherwise, I would wait for a multiple day setup to really get a base before you start to think about running for new highs. But of course, we do have this last higher move high, which is our upside breakout level. So just in case the market does breach that area, then we'll probably see a extension of this current bull market. And the New Zealand dollar, US dollar currency cross has been very firm with this rally. So it wasn't just a technical thing going on or fundamental. This thing is just a bull, period. All right, US dollar, Canadian dollar. We're going to catch this one real quick. And this one, look at this, like a balloon underwater today. This is something interesting. The dollar, in certain respects, is doing well, and in certain respects, it's so here we have this move right here, where we have an explosive. We took out the range of yesterday and actually the last 3 sessions. So this is kind of a big deal. If the dollar index truly is in a correction, then this helps to support this basing right here, and this gives us credence to have a nice corrective move higher. Now, the overall trend for the U.S. Canadian dollar obviously is a bear, and it was an aggressive bear over the last few weeks, especially the last month. Very similar to the U.S. dollar Swiss and a couple other markets, and look at that. It mimics the dollar index and the Swiss a lot, by the way. This is patterning out right now. So if this is a bottoming phase that we're going through, that means we're not necessarily a bull, but we're looking for an upside correction, which is very viable right now, considering the severity of the slope for this slide. See, something like the Euro-US dollar that's been just like inching higher, and some of these other currencies. Not so for the Canada. This thing has been, I'm not typically a U.S. dollar Canada cross trader, but this has really been a nice swing trader's dream, especially over the past couple months with some of the moves that you've been able to catch. All right, so this here would be our target range that we're looking for the market to gravitate to. And then this would probably be where the market's going to run out of gas. First of all, this is a good basing area. If you just look at as the bulk of trading for the past how many months is between this area that our target range hits into. So this would be a good resistance area if the trend is to remain bearish. However, the market could still come up to this spot here, and as long as it doesn't take out this pivot after this last higher move high, I think you're going to be safe for any corrective move. Now this would be excuse me, the only thing that would change this perspective would be that if the U.S. dollar starts once again to fall apart. If the U.S. dollar falls apart, then that helps to keep this trend intact. And that's why I think right now, especially, you have your fundamental factors that are driving this corrective move. With any luck, cooler heads prevail on both sides of the conflicts that are going on. And remember, we also have North Korea that's been edging around the past couple of weeks. So it's not good if we start to have a two-front warfare going on. In that case, you'd probably see this trend continue back lower. So for the short term, we're a bull, and we are looking for a rally to press up into this target zone here. And then we'll see what happens after that. Let's see, one last currency to look at. We're going to go back to the Euro-US dollar, where we started. And just to remind you that this is probably, all these trades are coinciding with each other. These target zones, remember how some of them are pretty big as far as distance. There's a lot of opportunity. The pound is the one we're looking to go sideways, so be really careful with that market. And the expectations is where you have to be careful. So with this one, whereas those other currencies that we looked at just now, trading the outright futures or the Forex cash markets are probably really good deals. But with this one and with the pound, I would start to look at options and binary options for the to trade these two crosses. Just because of, remember, we have this Brexit deadline, and then also the average true range in the euro US dollar has not been that big for a year, over a year. We have had some nice ranges the past couple days, or especially the past couple weeks, especially with this big rally here. And even today, look at this, we have a range of, we got a 60 pip range today. That's crazy. That's usually the range of a whole day on an excessive trading day. But to have a trending move day like this, that is really, really good. That's starting to show that volatility might be coming into the euro US dollar. However, I don't think it's really going to break out until we get through the Brexit date right here. So do try and remember that just as we had the pound in that little bubble of starting to settle into a sideways trade, oh, look at this, right between our pivots right here, we could see us, like I said, just come into this little range here, hold up, and then this will just be a chop fest for the next week and a half. So this could be the last trade to for a swing trader to catch for the euro US dollar, and then it's going to become a range trader's dream, I think, for probably after this Friday, moving forward until the end of the month. So if you want to learn more about these Japanese candlestick patterns and how to execute them, which we had a whole bunch triggered recently, read the book High Probable Japanese Candlestick Patterns. It's available on Amazon in Kindle and paperback version. And at the bottom of every page on the www.forex-trading-unlocked.com website, you go just to the bottom of any page, and above our disclaimer, you can check out the book, and you can get a little preview, and you can share it, and you can buy it, whatever you want to do. And if you want to learn how to trade these signals, once again, that's what you need to read and check out. So that was our Forex analysis for January the 7th, 2020. And we look forward to seeing you again. Please subscribe to our YouTube channel, and that way you will get notified when these videos come out.